Okay, so let's go through these. Our last section of this chapter, we're going to talk about supplemental wage payments, backup withholding, talk about, kind of define what backup withholding is, Form W-9, estimated tax payments, and the Form 1040-ES, which is what is used with those estimated tax payments. So starting out here, supplemental wage payments. So these amounts that are paid in addition to any regular wages. It could include these different types, so vacation pay, commissions, bonuses, all of that stuff. It's being paid separate from the regular wages, then it's going to be subject to different withholding requirements. So if you get your regular salary every 2 weeks and then you get a bonus, and the bonus is paid on a separate check or a separate direct deposit, or it's treated separately, it's going to be subject to different withholding rules. If it's included with the regular pay, then it's just as though your wage has increased for that pay period. And we use the same rules for withholding that we went through with regard to when we talked about the federal income tax withholding rules. But first method, if the taxes are withheld, from employees' wage, so you can either withhold at a flat 22%. If it's $1 million or more, if you're lucky enough to get $1 million bonus, then that tax rate goes up to 37%. But if it's under that amount, then you can withhold at a flat 22% for federal income tax purposes. Or the other option, like I said, was you can add the supplemental and regular wages and figure the income tax withholding as if the total were a single payment. So, for example, if you normally receive, say your salary is, let's say you're paid semi-monthly, and you receive $5,000 for your regular salary, but you also got a $1,000 bonus on this paycheck. So we can combine those and just base the total withholding on the $6,000, or we can do it separately and multiply this times 22% for our federal income tax withholding, and then use our percentage or wage bracket method to calculate our withholding on this $5,000. So those are the two different ways that can be done. If taxes are not withheld from the employee's wages, you add the supplemental and regular wages and calculate the withholding as in Part B. So if, for example, if it's supplemental wages, but it's not cash amount. So for example, if you've got, you have some sort of, say your company pays for your country club membership. So, and the country club membership is $2,000 a year. Well, the country club membership is a taxable fringe benefit. It has to be added into your W-2 wages. That's going to be taxable to you. You're going to pay tax on it, but you're not getting cash for it. So in that case, you can't withhold 22% on $2,000 that you didn't receive in cash. So the value of that $2,000 amount is going to be added. We're automatically going to do this method. We're going to use that percentage or wage bracket method, and we're going to add it to the rate, because you've got to have some cash to withhold in order to do the withholding, right? Otherwise, you don't have any. There's no cash withheld. Wages are still subject as well to Social Security, Medicare, and FUTA taxes, as well as state withholding. So a couple of examples here. Zofia has a base salary of $2,200, paid the first of the month, single, claims no dependents. On June 1st, she's paid $2,200, and $98.64 is withheld from her earnings. On July 24th, she receives a commission of $1,000. It's included in her regular wages, so they add the 1,000 to the 2,200. Total is 3,200. Amount to be withheld in this case would be $218.64. The other way they could do it is withhold it 22%, which means this would be $220 of withholding. Add it to the regular amount of withholding. So if you do, in this case, because they're in a lower tax bracket, in this case, they're going to pay more tax if you do that additional 22% tax rate. So, and that's what the second example is here. Actually, that's what the third example is here. Okay, so that's what supplemental, you can do it those two different ways, flat 22% tax rate, or you can just add it to the other income and figure the tax on that amount.